Hello and welcome to the Wendell Effect. My name is Brandon Wendell, obviously the namesake of the video here. And welcome back. Unfortunately, I just switched to a brand new computer and I'm having a little bit of problem with my camera, so I don't actually have a camera for today, but that's okay because we still have the charts. I'll hopefully get this fixed by next week and we'll be back to where we were. So I want to welcome everybody back. Hopefully you enjoyed the first video and just going to make it that much better. Before we get started, just letting everybody know that we're not broker dealers or investment advisors and not making any personalized recommendations. And just these are my personal views and opinions on the markets. There's always risk in the markets. No matter what you do, you can never eliminate the risk. You can only minimize and try to control it. And that's about it. We're not subject to trading restrictions, so I can have a position in a security initiative one at a time. If you want to stay in touch with us, you can actually email me now at my own email address, thewendelleffect@tradingmindsetassociation.com. So a little bit long there, but it works. It's thewendelleffect@tradingmindsetassociation.com. You can also still follow me on Twitter @TraderBdub. And if you want to search on YouTube to find the video, you'll find it on the Wendell Effect. If you search YouTube, or there's the actual address if you want. You can also visit us at tradingmindsetassociation.com to get more information on different opportunities that are available for you to learn about the markets. Anyway, kind of go over a little bit of the schedule, what I plan on doing here. I'm just going to start off just giving you an idea. I want to do a weekly market analysis as I've been doing before and continue to do. We'll kick this off looking at the equity index futures. That's primarily what I trade for the most part, and I get a lot of requests on that, so I'm going to continue to do that. But in addition, I'm going to start adding equities to that as well. So we'll definitely take a look at different equities that are out there. Today, I don't have anything prepared as far as individual equities, so we're going to look at sector rotation and take a little bit of a view as to what's going on in different sectors, what might be hot coming up, what might be cooling off, and how to identify some of those things. Additionally, I haven't forgot about my friends back in India. I used to live there and taught trading over there, so I've done some videos in the past, and we'll take a look at the Nifty, the Bank Nifty, and maybe some securities there as well. Also jump into a bit of cryptos and see what's going on the blockchain side of the markets and what's happening with our digital friends. And then eventually we'll finish up with a little bit of chart school. So we'll take a look, see what's going on. I started going over some concepts yesterday, and I will continue to do that as we go forward. So sounds pretty good. Buckle up. Here we go. We're going to kick it off with the weekly market analysis of the equity index futures. This is obviously for the week of April 4th when I'm recording this. So we'll jump right into the charts. And starting off, I've got the ES here on a daily chart, and we had a bit of a rally today. We are still stuck right in this area of supply, or just below. Why did that not switch over? Split zones. It's not changing over for me. There it goes. Anyway, wow, that was nice. Just blinked out. All right, so the computer's acting a little funky today. And let me clean up a couple things here that might help us out a little bit. All right. There we go. Anyway, so you can see that we're pulling back a little off that supply, and we'll have to see how much of a retracement we actually had, because I'm curious to see if this is done. I didn't think it was. I thought we were going to retrace a bit more, but it looks like we've only retraced 23.6% of the overall move. I'm wondering, actually, yeah, it kind of misses it there. I usually start my retracements at the open of the candle that gave us the bullish move rather than the lows. A lot of people use the lows, which you can, but I found it's a lot more accurate usually when you use the open of the candles that gave you the move. So on a green candle, it'll be the bottom of the body. On a red candle, it'll be the top of the body. Anyway, you can see we retraced 23.6. We got a bullish candle right here, and we've confirmed that bullish candle, that kind of hammerish or dragonfly doji, if you want to call it that. Technically, it's what it is, dragonfly doji. Looks like a little dragonfly with a big torso and small head. There's the wings. And we confirmed it by making higher low and higher high today. So we're looking like we may continue this move to the upside. Since we've tested this supply zone, we should break and go to the next zone. Now with the Fibonacci extensions, there we are. Let's see if I've got this set properly right now. And yep, 61.8, good. So our first extension or target would actually be 48.11. And then we've got 5,000 for a second target. So if we continue to make some new highs, it looks like we should be able to break out of our previous highs that we made back in December of last year, kind of recoup all that selling pressure we had from the beginning of the year. And let's see, whoops, hit the wrong button there. See if this is a little bit of a supply zone. Change that to a zone. This is taking forever to switch these over. I don't know what's happening with my templates. Hopefully I'll switch back. But anyway, you can see that target is actually a little bit above the most recent supply zone that we had right here. So we'll see if that is what is going to happen with our price. If it does continue to push higher through that supply zone, the supply actually would be, let's see if I just manually do this. Yeah, my templates are not working for some reason. Very, very odd. Now bear with me for one moment here. Okay, so there we got a fix. You can see the supply, and again, the target is actually just a little above that supply, so that should take us to all-time highs, some new highs going on there. The one thing I'm a little bit cautious of and looking at is the RSI. Actually, it's giving us a formation, believe it or not. If you look at the RSI itself, believe it or not, we have a head and shoulders formation going on here. So that's the one warning sign that I would take into account and look at. Believe it or not, the formations that happen here can translate into real price action. So if we end up making a head and shoulders and breaking the neckline of that head and shoulders moving down, that'll actually cause prices to drop as well. So we may not be done with the retracement. As far as we can tell right now, we are, and we should be going higher. But if we start to fail, and you can see we barely got up to 60, 60 is kind of that threshold for trends. If we don't get above 60, then the bears might start to take over. But once we go above 60, we get that bullish push to the upside in price. So I'll be watching for that. But if we do get this head and shoulders collapse, then prices are likely to pull back as well quite a bit. So keep that in mind as we're moving forward here. I'm still relatively bullish on this market, but definitely a little bit cautious full forward to the upside. So dropping down to the 4-hour time frame, let's take a look and see what's going on there. I'll refresh my chart, and we can see that even though we did make higher highs, we didn't really have a huge move up in the momentum, and we actually were able to pull back into bearish territory on the retracement. So that's, again, another piece of weakness that we're getting in this market right now. And let's go ahead and clean this up. There we go. Start off with a clean chart as we look at this 4-hour time frame. We already did test this area as supply. Or did we? Yep, it looks like we did. We had kind of rally, base, and drop. Although there's too many candles there for a good zone. It was the daily zone that really held. So if we do continue to push back up on the 4-hour time frame, there's nothing here to hold us down. There was, I think, a little bit of supply before we get there, though. Yes, right here. Let me put the snap mode back on. As you can see, we have rally, drop, base, 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 and there's your drop. So as we're moving up right now, might stall out just below 4,600 as we run into a little bit of weakness. And you can see we're starting to stall out a little bit because we didn't have nearly any selling pressure. And now we get a little bit of topping tails on the candles. That's selling pressure coming in. So if that grows as we approach the supply, we're likely to hold the supply and push back down once again. And, well, we did start to form a little demand rally, base rally here that could cause prices to bounce if we do pull back from that supply. If it doesn't hold, then our next area of demand is actually down here at about 44.60. So just be careful, watch out. And if we start finding weakness, I don't know if this would be enough to hold us up at the 45.50 area. It's not as very powerful. This has got a lot more bullish pressure, and it's a breakout of a prior high as well. So that means that this is the better zone, the 44.81. So watch that 45.96. If we start to find weakness there, look for that market to drop until it hits the 44.81. Dropping down to the 60-minute time frame for this week. And this is running a little slow here. Come on, you can do it. Supposed to have pretty fast internet here. I'm not sure what's going on, but we'll get that going in a minute. So now here we are on the 60-minute time frame, and basically what we did today was rallied quite a bit. up into supply. You can see here's the supply zone that we rallied into. As a matter of fact, we had some warnings before we took off to the upside. Early this morning, I saw, and I tweeted about this too. You see on the April 1st, you had the lower lows in price. However, we had a positive divergence where the indicator was actually showing slightly higher lows. That means you ran out of bearish momentum. And we got the confirmation right here where we made a low. And on that low, we failed to make a break below 40. So that was a bullish signal going into today. And as you can see, the markets today were very bullish. We rallied up, but ran right into supply. Now we're above 60, so this is just going to be a small correction before we push higher to another level of supply. Remember, we had the 4-hour zone overhead. I kind of deleted that, so let's go back and bring up that 4-hour once again. That ultimately, I think, is where we're going to end up stalling. I don't see a reversal necessarily, but I do see a stalling area, and that's 45.9675. Go ahead and color that a little different. Go back to the 60-minute and see if there's anything else along the way. There actually is a little bit of drop-base drop along the way. So we may end up with a little bit of stalling just shy of that area at 45.89. But at first, we got to pull back. So where are we going to pull back to? Well, we shouldn't fall back too far. Maybe just be a 15-minute demand, or maybe this area, rally-base rally that we just finished. I think, let's see, it closes 67 and a quarter, 67.50. So that's actually inside of this. Nope, that doesn't qualify as a good zone. So if we fall back, this might stumble a little bit, but it's not going to hold us up. We actually could fall back, possibly. I'm not even seeing where the bottom might be on this chart. We might fall pretty well because while there's, again, a little bit of stumbling area here, a speed bump, if you will, there's not really a good area of demand. Even this, I don't believe qualifies. The high on this candle is 15. Close here is 15.75. That's above. So that doesn't qualify as demand. So if we start falling, look out below on the 60-minute chart, we should go down to that 4-hour demand zone that I was talking about earlier. So let's move on to the Nasdaq now. And I'll start off on the daily time frame, bigger picture. Let's clean this chart up. And we see an area of supply that we are just shy of right now. Now, interesting enough, usually when you stall just shy of a zone, you usually pick up momentum to try to break through the zone. So the daily supply that's right here, 15,324, may not actually hold if we move into it. We're getting a lot of bullish momentum to possibly break and move up to new highs. So the next level supply above that, I don't even know if this area qualifies. Let's see, we got a low, 291, close there, 271. No, it doesn't. So let's see, we got a rally, 1, 2, 3, 4, 5, 6. This might be it. Let's see what the low is here. 298. No, that's 278. So that is actually the leg out. There we go. That's your zone. So we should be able to punch through the 324 to 636 after we've just pulled back a little bit. Looks like we're getting ready to rally again, and kind of use this little bit of an area as demand. Remember, this is a daily chart, so we did that on Friday where we kind of pulled back into this demand and bounced. So as we come up, we need to have more momentum than we did before. If we come into the supply zone and the RSI is lower than it was back here on the 29th, then we'll push back down. We will hold the zone. However, if the RSI is higher as we come into that zone, expect prices to keep going up to the 16,317 area of supply. If we do start pulling back, well, not sure where we're going to turn back to, but we do have an area of demand, it looks like, down here. Let's see the close, 449, high here, 441. Oh, no, it doesn't actually qualify as a zone. Close is too high. But what I would look at is potentially just a retracement, because I don't think we're going to go down either. Anyway, what I do see us having done is we retraced already 23.6 into this little demand, and it looks like we're just going to continue rallying up to that 317 area as we speak. So dropping down to the 4-hour time frame, just to fine tune this a little bit, you can see if we do get any weakness, we're kind of forming a little bit of demand on the way up as well. So if we pull back, this is our nearest area of demand right here. And once again, let me go ahead and change the template. Hopefully this works. There it goes. Our next level of supply is either that daily supply that I had, or let's see if there's anything along the way. And there probably is. Not a whole lot. Right here. Or there. As a matter of fact, there's really not much there. Let me go back to that daily once more. I want to mark off that zone that I had because I accidentally deleted it. So this is the zone right here that we're testing and probably going to get through. So this was the upper zone right here. There it is. And once more, I wanted to put that as a different color so I know. So going down in the 4-hour time frame, again, I'm not seeing anything that should hold us down as we're moving up. There's really a lot of opportunity and openness to push all the way up to these highs on the Nasdaq. So that's kind of interesting. I don't really see anything to hold us back at all. Maybe this little drop-based drop area supply, but that's about it. It's right here. Yep, at the 145 to the 311 area. So it looks as though we're pushing up until we get to that area. I'm not seeing any real weakness yet in the markets. One thing I do want to keep an eye out for is always as we're making highs. So if we break this high right here, we should also be making new highs with our momentum. If we're not, then expect a bit of a pullback somewhere along the way. Maybe we're tracing back to the 14,888 or another zone as we possibly form one on our way up to the 16,145. We drop down to 60-minute. I'm not sure if we're going to see anything different. Not really. Maybe a little bit higher of a zone here. Got a little bit of rally base and rally going on. I think. Let me just make sure. High here is 924.75. Close 925. It's pretty close to it, but this may be a little pullback area, a little bit higher, about 14,925 if we do pull back before we rally. But overall, looking pretty bullish. Take a look at the Dow. Once more on the bigger time frame, the daily chart here. And you can see I had these drawn out before. It looks like we already bounced off a few zones. On the daily, I don't really see much of anything. Go ahead and clean this up, though, start fresh. There really isn't any kind of a supply zone or any kind of demand zone. Well, there's demand we hit. Drop base rally is what we're at right now. But the market is showing some resilience and bouncing off of that area. So going down to the 4-hour time frame, as we come up to these previous highs, again, we want to see that we have bullish momentum. So watch that RSI. It's a momentum indicator. The higher you go above 50, the more bullish momentum you have. So definitely want to see that as we try to break prior highs. We're going to run into a little bit of a stumbling block. Pretty much right about here. Got rally, base, and drop. Now, it's not the strongest zone because we didn't break this low without a little bit of a pause before we did push below it. But we did break that zone. So overhead, we have a little bit of an area, 35,067, that could act as a bit of supply. Should we pull back at all? Because we do have some weakness here. But if we do pull back, we do have rally, base, rally right there as demand at 34,389 that's going to catch us. It's actually, that's our leg candle. That's the only base. And you can see we've tested it twice. We haven't gone very deep in the zone because there's a lot of buying pressure there. But that would be a great opportunity to buy if we do pull back for another rally. So it looks as though right now we've still got, actually we got sideways motion, don't we? We might get caught sideways, it looks like, in these two zones, back and forth for a little while. Now, if the Nasdaq drags us higher, then the Dow will probably go up with it. And if we do, let's see where our next target is. We can break out of the sideways zone. But really, I wouldn't want to be going long on the Dow. I'd rather buy the stronger Nasdaq than I would want to play the Dow. The Dow looks a little weak. And let's see, what's the low here? 35,485. The close is 486. Okay, so that closed inside. So this is our zone. Rally, base, and drop. That's your next target. 35,486 if we can break up. But like I said, there's not as much buying pressure here as there was in the Nasdaq. You're better off buying the stronger index. And finally, the Russell. As we take a look at that, I'll go ahead and go out to the daily chart first. Fresh, and you can see that we have pushed into a daily supply zone. we've only got a little retracement going on right now. So let's clean this up. I'll put the daily supply zone back. Right there, you have drop, base, drop. As you can see, we've come into that area, just a little pullback. That's all that's going on right now. And if we put in the retracements, let's see, it looks like a 38% retracement. Sure is, on the dot right there, 38% retracement. Looks like we're getting ready to go back up again. We were above 60 on the test of supply, so that means supply is a lie. We should be able to get through it, but it's just going to take a little bit more momentum. So once again, as we have pulled back already, we should be continuing to climb on the Russell. Watch once more as we break the high here at 2137. We need to have more momentum. If you have less, then watch for a false breakout before it pulls back once again. So we go down to the 4-hour time frame. Let's see where that pullback or failure might occur. The whole thing itself is actually a little bit of supply here anyway, of rally, base, and good selling pressure for the drop. We're flattening out a little. You can see we're having struggles. The red and green candles are starting to alternate, which means there's not as much strength in the markets as there was before. And let's see what else we got going on here. We got rid of the Fibonacci retracement. We don't need that for now. We've already done a retracement. This is the daily supply. I'm not really seeing anything else right now. Just a little bit of weakness, as I said. Prices are not rallying as sharply as they had before, and the momentum is a lot slower too. So we're not getting as much momentum as we once had on our previous rallies. So again, the mixed color candles, the weakness there. It looks like we may just go a little bit sideways, but dropping down to the smaller time frame, not really seeing anything else to clarify it. We do have a demand zone that was already tagged here this morning at 10 a.m. And boy, was there a lot of buying pressure there. You can see as we try to drop, price said, nope, we're going up. There's buyers here. We want to go higher. So overall, still trying to go up, but just not really doing it very strongly. As a matter of fact, as we rally up to this previous supply zone, watch for this 2113, 2118.4. There's a really good little supply zone there. Now, I don't expect prices to completely reverse, but I do expect them to possibly stall there this week. And maybe if we go sideways, remember, if the Nasdaq goes higher, it's going to pull everything up with it. But overall, we're still seeing a little bit of weakness here in those equity markets. So that's kind of what I'm seeing so far in the weekly equity indexes. We'll go ahead and move on into the stock market analysis. And again, I'm not going to look at individual stocks today, but I will going forward. However, we can go ahead and take a little bit of a look at sector performance. And I'll do a lesson on this eventually in the future, but just for a quick review, if I go out to, let me just show you stockcharts.com. And one of the people who was really influential for me in trading was Murphy. I can't remember his first name now. You'd think with all the influence I would remember it. John Murphy. Anyway, he wrote a lot of books on technical analysis. He's one of the first chartists that was ever on CNBC back when it was FNN, Financial News Network. And this is his website. So one of the things I look at on this is performance charts, PERF charts right here. So I can go to S&P sector ETFs, and there's other ones in there too, but this is kind of neat. You can see the different sector ETFs. They have discretionary, consumer services, technology, industrials, material, energy, staples, healthcare, utilities, financials, and real estate. And basically, the reason why we're looking at these is it can give us an idea of where we are in the markets. When you scroll down a little bit, you'll see, if I zoom in more, maybe not, come on, there we go. This is kind of a sector rotation. So the stock market there is in orange and the economy is in blue. So the stock market leads. And if you start to see that the industrials, materials, and energy are the best performing markets, that's usually done during a market top. Then people will start to expect the market to slide before the economy goes into recession, and they'll buy safety like consumer staples, healthcare, utilities. So a couple things we can do. One, we can just take a look at all these different sectors to try to see what's performing best or how they're performing against the S&P 500. So right now you can see energy is the best performing sector. There's also a bit in utilities. That's number 2. So that's not necessarily good. If you're seeing a lot of performance in materials and energy, that precedes, and it almost looks like we're starting to hit the top of the peak. It's starting to roll over, right? It means that we might be kind of in this area right here. I don't know if this will allow me to go back far enough. Unfortunately, it only goes back so far. You go back, there we go, 2007 to October 2008, and it's a little late actually. This is after the recession began. But if you go to, and I had the pictures somewhere, I'll have to dig them up. But if you go back to, say, December of 2000, yeah, if you really want to go back further, you want to end this study in the beginning of 2007, or I'm sorry, late 2007, October. And it really literally showed you something like this, where the energy and materials were the most bullish right before a crash. And you can see right there, June 2008. So if you take a look at, say, the SPX, the index, go to a weekly chart here, and well, let's go to monthly. There we go, monthly chart back in 2008. Now this is a little late, but right there, we're talking about June 2008, right? That's where the markets had already started declining quite a bit. As a matter of fact, from our highs, we had already dropped roughly almost 20%. So we were right on the cusp of bear market, right? So what's going on in the sector rotation here? Right there, June 2008, you can see this is right before the fall. You get a huge bump in energy and materials. For some strange reason, real estate was doing well then too. This is actually kind of right at the end of the real estate bubble. And then, of course, when you start to drop, look at what performs. You got consumer staples, healthcare, utilities. Those are the defensive sectors that you would expect to perform during market crashes. Well, that's May 2008 to November 2008. Oops. So again, if we go May 2008, right about there, to November 2008, while that market's crashing, people are buying safety. And then if you want to take a look at the market bottom, well, as we're coming towards the bottom right here, March of 2009, say we go from October 2008 to March 2009. March 2009, there we are. And again, bring this to October of 08. And it's not really a great picture, but you can see we're still in the bottoming out our defensive stocks. But now we started seeing some growth in discretionary consumer services and technology. Why? Those are what are bought near the market bottom to signal, hey, we're getting ready to go back up again. We want to play these power moves. So then we go into the bull market. And during that section, that was 2010, April, from March of 2009. Let's see. March of 2009, there we go. The actual bottom was about March 4th, so I'm off by about a day into 2010. When I say it was about April, yeah, there it is. April 2010, you can still see, obviously, financial or real estate's throwing everything off, but there's a lot of gains right there. 30% industrials, materials, and discretionary. They're doing pretty well. In the defensive sectors, nobody's buying them, right? Because you don't buy those when the markets are going up. So let's take a look at what's going on right now. And unfortunately, I usually look at the last either 180 to 200 days. And as a matter of fact, we can just do past 6 months even, right there. That is not a good sign. What this is really showing us right now for sector rotation is we've got energy peaking. Obviously, inflationary pressures are causing that to happen. And that's usually occurring at the peak of a market. And we're also seeing a lot of buying in the defensive sectors. Utilities are at 10.81%. So that's showing that there's weakness potentially in the markets and we're getting ready to possibly drop. So going back to our analysis where we've been climbing quite a bit in the overall markets, we may not make a new high. Even though it looked as though we might be able to break out to some new highs on some of the indexes, that may not be the case. We made a peak already, and you can see we're losing momentum as we're trying to go back up. We need that momentum to actually carry us to new highs. So according to the sector rotation, that may not actually be happening. We can actually play around with this and fine tune it a little bit more. One of the things I look at right here, we have, there it is, consumer staples. Okay, and that symbol is XLP. And then you've got consumer discretionary. By the way, these are all against the S&P. If you just want to look at the raw sectors, that's how they're doing. But that's against the S&P. So anyway, discretionary is XLY. Now think about this. Consumer discretionary usually performs best when the market is at or near a bottom, right? That's where people are buying up before the bottom of the market. And consumer staples is being bought right near the peak of the market because that's a flight to safety. Discretionary securities are things that we don't need, but we buy when we have extra money, when we're doing pretty well. So what we can do is actually chart the two. Why don't we take XLY divided by XLP? So we are actually dividing one by the other. And we can do this as a candle chart, or really it kind of looks better as a line chart sometimes. So looking at this as a line chart, let's see if I can thicken it at all. There we go. Perfect. So basically, this should be mimicking the S&P 500, right? As a matter of fact, let's compare. We can compare this to the S&P 500. There we go. And you can see that when the consumer discretionaries are outpacing the staples, typically the market will be bullish. And when the consumer discretionaries are underperforming staples, staples are doing better, then the market might be getting ready to go down. So basically what we're seeing here is, this is a monthly chart. I'm going to remove the comparison. And we can go back, and look to see, okay, right here, we're seeing the consumer discretionary outpacing the staples. That means the market's probably doing really well because the economy is doing well. Once you break and start to basically use that prior support level as a little bit of resistance, that's showing you there's weakness in the markets, and the stock market might be ready to crash. Let me see if I'll bring in that SPX. I really kind of want them separate, not percentage change, but it'll work like this as well. But typically when you see this trend snap, that means there may be some weakness coming into the stock market soon. Actually, let me see if I can do that. Let's do this. Remove. I'm not sure if I can put it into a separate. No, I'll just have to make a different chart. We'll do this. 2 charts. And I'll just do SPX on the bottom with a line. Or I can even leave a candlestick chart, it doesn't matter. We don't need the indicators for right now. There. So, like I said, if I line these up on the monthly basis, go back to 2004, there we go. So they're together. Typically, if you start to see the trends breaking down, and really this one, it broke a little bit, but you see the market was still going up. Delete this. Put this up. Notice we were kind of bouncing and bouncing and bouncing. And then we really had a breakdown. It was kind of a false breakdown there. But even during that breakdown, look what happened. We had a breakdown where the discretionary was underperforming the staples. And what happened to the stock market? It went down. It pulled back, didn't it? So look what happened here. We had this big breakdown down where the consumer staples were outperforming the discretionary. That's a huge warning sign that the markets are getting unstable and maybe getting ready to break down. Oh yeah, look at that. That was the crash. So how do you know when that crash and that move down is ready to end? Well, trends. Take a look at this overall trend downwards. And you can see that the overall move down, and we could probably put in some moving averages or other things. Really, we're supposed to have 3 touches for a trend line, so that's not technically a trend line there. Let's see, maybe it was here. Better. Nope, I can't get 3. Anyway, you can see in 2009, kind of put in a little double bottom right there with a higher low and started breaking a bit to the upside. Well, that was pretty much the bottom. March. Right there. Notice how that preceded the reversal in the stock market. So once again, we go to this upper chart and we're moving up very nicely. We're getting some weakness now. And we're not moving as up as fast as we were. We're getting a little bit of weakness here in September of 2011. So we go to September 2011. And you can see we dipped. You know, it's kind of a breakdown a little bit sooner. Maybe if I put in the trend line here. Once again. Overall, shape broke down, and it was a little bit earlier, actually. It was in July. And what happened in price? Started breaking down to new lows. So it's a decent little warning signal from time to time. It's not going to give you the exact dates, but when you see trends changing, it could be a good warning that the markets are getting ready to turn. Same thing right here. Notice we broke to the upside. We had been bumping up against resistance, broke it. Now it's using it as a little bit of support. So now it may be time to buy because we are getting ready to take off April 1st, 2013. So we go forward to April 1st, 2013. There we are. And that was a pretty decent area to buy. It confirmed the bullish trend was likely to continue. Let's see for how long. Still moving up. We had a false little dip right here. So a little false breakout in 2016 in May. See how that affected us in the markets. 2016, May. Just went sideways. Nothing really to worry about. Overall, still moving up. And starting to break down on the trend, I think. Right there. That's in 2019. So once again, we got a breakdown August of 2019 going into September. So 2019, August, September, here we are. Warning sign that the market is getting ready to get weak. And there it was. There's the pullback. So it's not, you can't time it exactly, but you get an idea when that trend breaks where the discretionary is underperforming the staples, the market's getting ready for a turn. So where are we right now? Well, we got a problem, don't we? We had that big rally and a big dip. So if we try to mark off any sort of trend right now, I don't know if we can. That was broken. So that means we should be getting ready for some sort of a drop in the stock market. Obviously, we had a little pullback off the highs back in January of this year. And actually, that broke in December. Look at that. So it was pretty timely for this move down. Now, we have to be careful because a lot of times when we break like this, we often retest before we continue lower. So the first kind of stumbling block that I'm going to be watching is this. We kind of use this area as a little bit of support. We broke it. Let's see if it becomes resistance. If it does, and the sector becomes weak, the discretionary becomes weak, then watch for the markets to get lower. This is kind of a fundamental view of the markets, kind of a bigger picture fundamental view. And again, we can just take a step back and look at the big picture here. Overall, been very, very bullish. And we may be getting ready to pull back to the average even. Go ahead and draw this back a little bit. Just kind of curious. Nope, no touches. Not enough. Overall, though, that worries me that we pulled back a little bit. And you could probably do this with other sectors as well, but really the two that I've looked at, and you can break this down to daily even or weekly. And you can see that you can kind of time some of the turns. Let me show weekly real quick first before we go to daily. So if we go to weekly here, again, we have an inverted head and shoulders. Look at that. If the inverted head and shoulders holds and we break to the upside, that's actually a bullish thing for the stock market. Watch for it to go back up a bit. There's your left shoulder, head, right shoulder. Could be a bullish sign for a period of time here as we're returning back up from our trend breaks. And if we go to the daily chart, again, if we were using this in real time to kind of figure out what's happening with our broad market, go and bring those back together, bring this to a daily chart. There we go. And where are we here? That's 2021. So you can see we were kind of stuck in this ugly range in 2021. Finally broke out to the upside. Let's mark it off. Right there. So we get that breakout October. So October of 2021, the breakout occurs. That's telling you, hey, it's time to go long. October 14th. There we are. Wrong button. There it is. See? You broke out of the range and never looked back. Oh, no, we did look back eventually, but there it goes to the upside. That was very, very bullish, going up to a higher range. So, buy into it, prices go up. Now we get a breakdown, lower high, lower low. That's a warning sign that things are getting weak. That happened in December, and you can see that a prior demand zone here is actually becoming a little bit of resistance. So December 3rd, where are you? Oh, not there yet. There it is, December 3rd. And that's the warning sign right here that's telling us, hey, this is getting kind of weak in the markets. We may get a bit of a drop. If we break down from this range that we are now in, see, that's the range. If we break that range, there it goes, we're going down. So sure enough, where are we there? December 10th? 10th. What happened? Predicted a lot of that, didn't it? So the breakdowns from these levels and the trends can really give you an idea as to which way the market's going to go. Now, as we're moving in this daily chart, kind of an overall trend, I'm being a little sloppy with this, but you can see overall still trending down right there. Inverted head and shoulders, just kind of like what we're looking at right now, as a matter of fact. Just pointed that out. I'll do it again. There it is. Left shoulder, head, right shoulder, break. Overall, we broke to the upside right here. March 16th, that is saying, oh, sorry, March 20, no, it is 16th. March 16th is saying go long. The market's getting ready to rally. Okay, and that's all from that indicator right there. And that was a pretty good buy opportunity, wasn't it? So that's the inverted head and shoulders we saw on the daily chart, and it's pushing to the upside. So if we're reading this right now, trying to figure out what the heck we should be doing with the stock market, it's in an uptrend. Although not the strongest of uptrends on the daily. You see, we touched, broke. So there's some weakness coming in. When did that break? Zoom in more. That broke on March 30th. Okay, so we were trying to push to the upside. Again, we were coming into these prior areas that was the bottom of our range, and that could act as a little bit of resistance as well. And we broke that trend line. So immediately right now, I'm seeing there's a little bit of weakness. Even though we started to become bullish, now we're getting a little pause in that bullish trend. And again, that was on the 30th of March. See, on the 30th of March, we started getting red candles on the price action of the SPX. So that's what I'm looking at right now. Again, you can't time it exactly, but overall, we're seeing a little bit of weakness coming into price action right now based on the sector rotation. So keep that in mind as we move forward. We're seeing some weakness. We may go a little sideways in the overall market. So I'm seeing that a little bit of weakness coming in. So that's what I'm noticing on some of the rotations for the sector. Moving on to our next section, I'm going to go into some of the Indian markets and just do a quick analysis of that because, again, I was doing some separate videos on YouTube, and I'm no longer supporting those. I'm no longer doing those individual videos. I'm just doing this one. So hopefully you enjoy this, and you can always fast forward the things you don't want to see. So if you are in India, Kim Cho, and let's take a look at the Nifty. Button, there we go. I'm going to go back to a candlestick chart. There we are. And we broke hard to the upside. I didn't think that was going to be happening. A little bit of a shocker. But on this daily chart of the Nifty 50, you can see we were in a sideways range and continued the same direction that we entered the range in. So typically when you go basing sideways, you usually break the same direction. That was up. And that's exactly what we did. So let's see where we might be headed. We had an impulse up, correction down. And bear with me, I got to put in the snap mode. There we are. That's set. So we can have proper targets. And our first target for the projections upward is going to be pretty much right where we just stalled out. 61.8% at 18098.35. We don't have an overhead supply here, so it does look like we could possibly just pull back a little bit before moving to all-time highs again. The only demand, which really is not a good demand zone, is this. I wouldn't call that a good demand zone, so I'm not even going to bother. And if we start to pull back, well, the impulse really began right here. So this would be our retracement value, and I'll go ahead and put in, there we go, the retracements. So that's what we're looking at right now. We're getting a little bit of a pullback, and let's see where we might pull back to. If I go down to the 4-hour time frame, really there's nothing here other than this area. Kind of basing a good rally out of that area, which is a 61.8% retracement. It's pretty deep. at 17,536 is where we might be pulling back to. You can see on the past couple days here, on the past couple 4-hour charts, we had rally and now we're getting some weakness. That's topping tail, which is selling pressure. This is actually a smaller candle inside of the larger that's showing weakness as well. So looking at a possible pullback to one of these retracement levels, the only one that's confirmed with an area of demand is actually the 61.8, which is at 17,536. Not sure if we're going to get that bearish, but it possibly could. And if we drop down to a 60-minute chart just to see if there's anything else along the way, there really isn't. So the only demand I have, once again, is down here at that 61.8%, basically 17,500 area. It's actually 548 to 17,511. So that's what I'm seeing as far as a possible demand zone on the Nifty. And we can always take a look at some of the top stocks. Do I still have my list? Yep, I do right here on the Nifty. And we got things like Reliance, which I will go to the daily chart for. You can see Reliance, is that a weekly supply? It certainly is. You can see we came into this little bit of weekly selling pressure, and that might give us a little bit of a downward push. Let me bring in my RSI because I got rid of that, fortunately. There it is, Relative Strength Index. And I just need to adjust it for a moment. So with the RSI, I want to thicken that a little bit. And I don't need the moving average or the bands. Get a little crazy with some of the tools they can put on here, and I really don't need all of them. So I do want a little bit of background fill. So I'll just color it a little bit. And I think that's probably good for now. So you can see we got plenty of momentum to potentially break through. We still have a strong bullish trend here on Reliance. But since we're at a weekly supply, we might pull back just a little bit. Going back to the daily time frame, you can see it's kind of a supply that we almost got through. This is our zone right here. Drop, base, drop. Tested once, so we went really deep. And it should be able to get through. We're just going to get a little pullback first. And we do have earnings coming up, it looks like, until April 29th, though, the end of the month. So there's a little bit of time left until that. If we do start to pull back, just look for a correction, honestly. We have a good demand zone here at 24.84 if it pulls back. And we can also apply a Fibonacci retracement to see. And I'm using this on Reliance because this is the biggest weight on the Nifty. It has the most influence. So looking at the retracement values, it's nothing really helping us there. I go down to the 4-hour time frame just to see if there's anything else here. And unfortunately, I really don't have anything as far as demand until the 50% retracement. As you can see, if we do pull back, that 50% retracement is the nearest demand zone that we have. Rally, base, base, and rally. And then you also have the one that I marked off previously at 24.84 area. So just keep that in mind as we move forward. And that's been the market that's been dragging us to the upside, although it looks like HDFC really jumped with a big gap up. It's another big weight, obviously. And it also gapped right into supply. And that's a problem because look at the selling pressure that came in. So we couldn't continue to stay up there. We saw selling pressure, and that's going to probably pull back a little bit as well. So keep an eye out, a little bit of weight there. I'm going to go to the Bank Nifty. Nope, that's not what I wanted. Let's go to Index, Bank, there we are. And I'm on the daily chart, and it looks as though we are right into some selling pressure. We've got a lot of gaps. Gapping like that after moves up in price, those are usually exhaustion gaps, the end of the move. So that's what we're seeing on some of the stocks as well as on the index here for the Bank Nifty. So we might be done with that move to the upside for a little while. I would expect a correction after this. Although it didn't quite hit, we gapped up into the first target for the extension. It didn't quite hit the second target. But overall, usually when you get that kind of a gap after a move up in price, it's actually the third gap. That's usually an exhaustion gap that leads to a bit of a pullback in price. So keep an eye out for that. Going down to the 4-hour time frame, and we have rally base, drop. So really on the 4-hour, we came running right into these areas of supply that should also give us a push back down. So once more, Keep an eye out for that retracement. As far as targets go, we have an impulse up right here. So for our targets, as we pull back on the bank Nifty, we'll have to see if there's any demand zones along the way, but we got 38,172, 37,806, and 37,509. So dropping down from the 4-hour to the 60-minute just to see if there's any targets along the way. Really don't have anything. Been very gappy, and there's no real strong demand except rally-based rally at the 78.6% retracement. Now, I don't think we're going to be heading right down to that area. There's no way. We'll probably bounce along the way, but you can see we bounced a little bit here at this 23.6. So as we're pulling back, keep an eye out for that area at the 38,172, and then of course the other zones as well before we continue to move to the upside. We still have a lot of momentum. We're in bullish trend. Back up to that 4-hour time frame. Yeah, the trend is still strong. So this is just simply a little pullback before we continue to go up. So that's what I'm seeing in the Indian markets. And now let's jump a little bit over to crypto. Coming up on almost an hour for this video. I don't want to go too long. Hopefully still got your attention here. But jumping into the crypto markets, go to some of my top ones here. We'll start off with good old Bitcoin. You can see it's been bing, bouncing around here on the 4-hour time frame. Let's go out to the big picture here. Weekly chart first. You can see that we're stuck right in the area of this pause before we dropped. So we're seeing a lack of momentum on the weekly time frame. We didn't get into bullish territory, not even close. So our current previous candle, not the current one, but the previous candle showed indecision. Okay, we got indecisiveness on that previous candle. Going down to the daily time frame, let's see where we are. Well, we have overhead supply here. We haven't reached yet, and we're currently dropped 1, 2, 3, 4, 5. That doesn't qualify as a zone. I mean, I was thinking this was a zone right here, but it does not qualify because this red candle didn't close inside the leg in candle, and it also didn't clear the previous candle's low. So we're kind of in limbo right now. We've lost momentum, as you can see. If we rally, I mean, it looks as though price wants to get up to 50,000 once again. But one of the key things is going to be, again, momentum. We need to get up above that high at 48.2. And when we do, we need to see our momentum above the previous high. If it fails to do that, it'll be a false breakout, and we will retrace back down, most likely to this area as demand. Rally, base, rally. And we already used this one. That was rally, base, rally. There's your retest right there. So if you're bullish on Bitcoin, you're watching this go to the upside, watch as it tries to break 48.2, and if it can, it must be above 70.59 on the RSI. If we have less momentum than that, it'll be a false breakout. Be careful. It'll likely slam back down to 42.218. If it does continue to go higher, if we have a lot of momentum, then we have that target of 54.36 overhead. So if we do start to fall back, let's see on the 4-hour time frame. Well, we just touched an area of demand that, yeah, it looks a little lower than the previous area right here. That was our demand zone that came close to. And look at that, we stayed above 40. So there's underlying bullishness in this market. It still wants to go up. So that's boding pretty well for those who are going to try to ride this up to that 50,436 area. And like I said, if it doesn't, if we do go up to this prior high with less momentum than we had before right here, expected to pull back, most likely, this is our target right here. Same thing we saw on the daily chart. The area of demand is right here. You got drop base rally at 41,275. So a little below 42,000 is where we could stall out if it does drop from that area on the false break. So keep an eye out for that. Going to Ethereum, again, I'll go out to the weekly chart. And we'll start off clean here on Ethereum. Not really seeing much. We put in higher lows and we got higher highs, so we're back in the uptrend. But we're having trouble getting into bullish territory on Ethereum because we can't get above 60 right now. So still bullish, but overall getting a little bit of weakness creeping in. Going down to the daily time frame, you can see moving up, but again, selling pressure coming in. This is what I don't like to see right there. Price broke to a new high, but did it without the momentum needed to sustain that high. That's where we're going to see prices pulling back soon. And this is a false area of demand. That's not it. Doesn't qualify. The actual demand zone is back here. So if we start falling down, look for a pullback to 29.70. I'm kind of curious to see, why is this happening here? Are we doing this at an area of supply or not? And we go to the daily chart, and we're actually, I think, a little shy of it. Yeah, we have rally, base, base, drop right there. So we're shy of this supply zone, believe it or not. Right there. And we have more supply overhead. This is going to have a real tough time climbing. They're just running into more and more selling pressure above. Another one right here on the daily time frame. As far as underside, demand down below, obviously got this 29.70, and we also have another area just below that. Not just below, but quite a bit below right here. You have drop, base, rally at 26.08. So that's kind of where we're at right now. I think we're going to pull back pretty soon, beginning part of this week. And I'm definitely a buyer at the 29.70 because the overall trend would still be up on the weekly chart. Yeah, I think that's all it's going to be, is just a pullback. So if we drop down to the 4-hour time frame, let's see if there's anything else we see. We may not even pull back that far because we do have pretty good buying pressure that creeps in right here at 3,200. There you are, drop base, and a good rally that took you to a prior high. You can still see the divergence working right here. Notice how price is making higher highs, but the indicator can't do it. So that's what's suggesting that we're going to pull back. And we did some already, but I think we might still pull back. I'm looking, actually, this is not a bad area to buy at 3,200 if we don't make it down further. There's another area of demand. Looks like it might be. Let's verify this. High of 31.79 and the close 31.76. Yeah, it is. So two zones right there. Definitely looking at a possible bounce in that area on the 4-hour time frame. That supply zone from the daily was a little bit higher than this, and that's where we'll run to for the target. And there's nothing else on the lower time frame to halt us. Nope. So 37.63 is where we're going to be heading if we can get that bounce. So what I'm looking for right now for Ethereum this week is a possible pullback to 32.86 or 31.93, with the target being 37.63 for the end of the week. XRP. Moving on with our coins here. I'll go to a weekly chart and take a look. We had consolidation that I marked off a little while ago. It looks like we just barely broke to the upside, but not a whole lot of enthusiasm on this one. You can see the momentum is pretty dead. It's just going sideways right now. So I'm not really seeing much out of this. We go to the daily time frame. We broke out, retested, it's held, but there's not much going on. It just looks kind of boring. So I don't see any good opportunities right now on XRP. Yeah, move on. Look at Cardano. Go to the weekly chart first. Broke out of that downward trend, obviously showing lots of strength. And we're still technically in a downtrend. Still haven't broken the prior highs yet. Be careful. This may be a short-lived move. On the daily chart, though, we are breaking through the supply. You can see we got too much momentum to hold the supply, although we are going to get ready for a little pullback pretty soon. Once again, we're trying to make a new high. We haven't quite done it yet, but look at how weak the momentum is down here. That momentum should be much higher than we are right now, and therefore we're probably going to get a bit of a pullback. I would say if you do pull back to this area, great buying opportunity at 91 cents. 86.28 to 91.51. That's a really good demand zone there. We broke out of this supply, or did we actually? No, it looks like we're kind of holding in that area. And that's what's holding us, is the momentum died off. So we may get a little pullback. If we do, then we could potentially bounce from that 91 all the way up to 141. That'd be a nice gain if you can catch that. So actually, that's not an origin of the move. This was the origin of the move back here. So there may be a supply zone left there, but really that may just be a retest of the prior area. So there may not be supply. That's a good thing because it may be able to continue higher, but there might be a little bit of a pause, and that would be our first pausing point. If it does get through that area, boy, this really could go. The next area of supply is $2, 201. So I'm definitely looking to buy at about 91.51 if we pull back to that area for the bounce. That's Cardano. We can go over to Solana. Again, looking at the bigger picture on the weekly chart, broke the downtrend, which is good for those people who buy this. Oh, sorry about that. Pascal's barking in the background. He's getting excited on Solana, I guess. So I go to the daily chart, and again, we have a little bit of divergence where the momentum is dying off, so we're getting a bit of a pullback. I don't know if it's going to be more than this. It looks like we had a little bit of a pause right here, you can see. Bear with me. Okay, sorry about that. Just dealing with my dogs a little bit. They're getting amped out. So if we pull back, honestly, this is the better area of demand right here. Rally-based rally at about 102.39 compared to the higher zone. That's just not as good. It doesn't follow through quite as well. And there's also another zone just below this, it looks like. Let me just verify. That's a close at 92.37. The high here, 92.34. So yeah, it is. So we have rally, basing, and rally right there. So we got two zones. That would be a great buying opportunity. If we pull back to that area, let's see where we might be headed to. On the daily chart, it looks as though we are kind of pausing right now in this area as supply. So again, if we continue to go up, we should be able to break through that on the next test. So let's see where we're likely to head to. It's back a little bit more, and actually we run into supply almost immediately. You got a drop-based drop right there. And then also at the very top right there, rally-based drop. Let me make sure. Yep, that looks good. So right now on Solana, if we can get a pullback and a buying opportunity, I don't know if it'll pull back that much. It might to 102.39 and then look for a target of 166. The other thing you can also do is put in the Fibonacci extensions from this rally that we've been having, or not extensions, but the retracement, excuse me, and just see there are retracement values here. So we may end up bouncing at one of these values. We are already kind of bouncing right here, as you can see, at 23.6 in that buying pressure trying to push us back up. I don't think we're done, though. I think we may end up pulling back a little bit more to 38.2 before we continue to go higher. That's kind of what I'm seeing there. And, well, we can do a few others. One of the ones that have been pretty hot recently is Luna. I've been watching that, and you can see it's moving up very, very strongly. We actually duplicated our previous impulse up. This is on the daily chart. We can go to the weekly, too. And we're at all-time highs now. So what I'm going to do is clean this up for a moment and bring in the extensions, taking a look at the last impulse up and extending it forward right here. You can see that we stalled out at 628, and we are now continuing up to our potential next target at 140. So that's what I'm seeing on the weekly chart, a continued move to the upside potentially. We are making those highs, though, without the momentum. That's why we pulled back initially. Let's see. Go to the daily chart, and we're making new highs in price, but we're having some struggles in momentum. So there may be a pullback that'll give us a nice buying opportunity. And first, well, we haven't formed it yet, but we got drop base possible rally, but it's not quite formed yet. We need another new high for that to be demand. Until that happens, the nearest demand zone that I would actually trade on is here at 94.11 to 88.93. So if we pull back to that area, there's definitely enough buying pressure to propel us upwards from there. And our first targets, obviously I'd like that Fibonacci extension at 141, but before we get there, let's see if there's anything else. No, actually there isn't. I forgot because we're at all-time highs here. So there may be some other extensions that we could possibly project, but overall, I just put a trailing stop on it. If I could buy the 94.11 and keep running it up until I hit the 141. Another one I was looking at is Link, and we are currently hitting a bit of supply, but we have enough momentum to potentially carry through after. As you can see, we stalled out, but we got a lot of momentum. So after we pull back a little, we're likely to keep going higher. And a place that I would like to buy is actually right here. So we have rally, base, base, rally. Well, it might be drop base rally, honestly. Either way, you got a little buying pressure, 1616, 1548. And then again, we might stall out a little bit, 1837. Then the next target is way up here at 25. So there's potential for a nice move up. I want to check that weekly trend as well, since I'm looking at this on the bigger picture. Overall, lower highs and lower lows, though, so this may not be the best buying opportunity. It might be a good shorting opportunity if you can at the 1837, targeting the 1616. So it kind of changes when you look at the big picture here. That's not a good, strong uptrend, like something you want to buy. So instead, there may be shorting opportunities as we continue to push lower. So anyway, that's what I'm seeing on the cryptos for now. Obviously, if there's other cryptos you want to follow, go ahead and message me or email me and let me know. And that way I can go ahead and put them in the new videos. And finally for today, let's go to chart school. So a little bit of education. I kind of threw that in the whole time anyway. But specifically, if you want to go to chart school, one of the things we talked about last week was understanding and reading price action. And if you recall, what I talked about on reading price action was that you need to learn 4 key things: color, shape, size, and location. So location will be a lesson all on its own, and that's actually supply and demand. Okay, so I'll be doing some more videos on that. Color, I think I touched on just a little bit last week, and that is really what you look for on the trend time frame. And again, I'm going to go into multiple time frame analysis and why I use certain time frames over others and how they're all related to each other. So we'll cover that eventually in chart school. But first, we'll go through some of the basics here. When it comes to color, whatever trend time frame you happen to be looking at, you want to see what is the dominant color. Because really, that dominant color is the trend. And that trend is usually the best direction for which you to be trading, in which to trade, I should say. So actually, let's do this. Go to our dominant color. Let's put that. Wrong button. Okay, so that was on what chart was I just looking at now? I totally messed that up. It was a link, I think, wasn't it? And deleted everything too, didn't it, on me? Okay, so we'll start fresh. That's okay. Having one of those days, right? So reading price action. Once again. And I like that orange. We can leave it there. So, as I mentioned, in my practice in typing, color, and that is on the trending time frame. And the reason why I want to take a look at that is the dominant color is your trend. So if you're seeing lots of green, you're probably in a bullish trend. You should be looking for buying opportunities. If you're seeing mostly red, then you're probably in a bearish trend and you should be looking for shorting opportunities. It's simple, but it actually does work. And then if you get mixed colors, that's trend weakness. Okay, so that's part one right there. And actually, let's go ahead and do this. Oh, there it was down here or up there. I did the wrong chart. That's why. That's fine. I like this one better now. So let's go here and let's go to a different security. I'll go to Bitcoin. It doesn't really matter which security we look at or time frame. So let's go to a 4-hour chart on Bitcoin, and I'll just pull this back to a random time. And you see that when we're in a strong downtrend, for instance, you're getting mostly red. You barely have greens. There's there's 2 greens together here. Then finally 2 together here. And then red and green mix, and we're moving sideways. But it wasn't enough to give us a bullish trend. Another two, no big deal. Another two green together, no big deal. We're still seeing a domination of red. Now, for the first time since we were declining back here, there it is. That was the last time that you saw three or more green together. Now we got three green together. So what does that tell me about the trend? It's probably ending. That's all. Again, nothing more, nothing less. Just keep it simple. We're seeing possibly the end of the trend. And sure enough, there's a bit more dominance of green. Well, we got three red together. Now, three is not necessarily the magic number. It's just, in this case, for this trend, it happens to be three. Three or more of a color ends up becoming your new trend. That's all. Keep it simple, right? Get rid of that. There we go. And there we are with the red again. Oh, three green. Once again, we might be ending. See, this was the end of the uptrend, and you saw we went down lower. Now we got three green. That may be the end of the downtrend, and we started going up again. Got one red, two reds. Nope, just two. 1, 2, only two. So we're not necessarily ending the trend. We're still getting mostly green. Look at that. Just got to be patient. Two red, mixed red and green. Notice we're starting to lose our domination of green. That's where we're starting to see a possible pullback occurring in price. Three red together for the first time since we were moving up. That means this uptrend might be over at this point. And it's obviously a little late, but look at that. Better late than never, right? Oh, three green. We're probably done moving down, right? Or not. It just resumed itself. Kind of went sideways. Now we got three red again. We're probably heading down. We had the three green, but still kind of moved down a little bit more. And now we're moving back up again. So there it is, three red again. Probably done with this upward move. And move down more. So that's color. And like I said, if you start seeing mixed colors, you may be getting to the end of that trend. One of the things I was looking at just a little while ago with you was shape. So if we go to number 2, that is shape. And really what we're looking at is the closing price versus the high and the low. And what it comes down to is any price action, from the low to the close is bullish. Basically, you're bullish if you have a bottom tail, right? And that's bullishness that pushes off the lows. And if you happen to see price action from the high to the close, that is bearishness. Oops, sorry about the dog again. There we go. All right, so looking at this, as a matter of fact, we can just stay on this chart and kind of see this. Right here, as prices were moving down, okay, notice we barely have any selling pressure or buying pressure. It's all selling pressure, topping tails, a little bit of buying pressure, more buying pressure, and prices stop going down. Now, as we tried to move up, we started losing that buying pressure. We're getting selling pressure coming in, and we're getting ready to push down a little more. But basically, you can play what comes next. We see right here, we close near the top of that candle. That's a lot of buying pressure from the low to the close. That means the next candle is likely to make a new high. And there it is. Once again, we're closing near the high of the candle. We're likely to see the next candle continue the bullish pressure. And it did. We made a new high. However, now we have a topping tail. So we couldn't keep at the high. We ended up closing lower. That means there's sellers coming in and pushing us down. And look at that. On the very next candle, we made a new low. We made a lower high and a lower low. Now we have buying pressure. We're likely to see push up. There it goes. This is a bit indecisive. We have a lot of bullish pressure, but a little bit of selling pressure off the top as well. I'm not sure which way this is going to go, but probably still higher or sideways. And look at that. We made a slightly higher high. But now we have more selling pressure than we have buying pressure. With that indecision, we're likely to start moving down. Well, we made the same low, not a lower low, but now we got buying pressure, getting ready to push up, except it didn't. So again, the shape can give you a little bit of a clue as to what's coming next. So often when you see lots of buying pressure like this, you end up reversing your direction. So that is a little bit more on color, shape, and size. I'm sorry, color and shape. We didn't get to size yet. So that's where I'm going to leave it for today. We will cover on next week's session a little bit of size, and we'll cover location. So welcome back to Chart School. Here we go. So hopefully you enjoyed this. If you did, let me know. Go ahead and hit the subscribe buttons and the like buttons and let me know you enjoyed the video. I also want to go back here real quick to my contacts. There you go. You've got the Wendell effect at tradingmindsetassociation.com. You can also follow me on Twitter. Stay in touch. Let me know what you want to see in the video, and I'm going to make this as great as I possibly can for you, the viewer, and the trader. So until next time, everyone, trade safe, trade well, and take care.